Hello and welcome to Between the Lines, the podcast that dives deep into the stories redefining APAC's reinsurance landscape. Recorded here in the newsrooms of InsuranceAsia News in Hong Kong, I'm Mithun Varkey, Editor-in-Chief for InsuranceAsia News. And in this episode, we'll discuss the floods in Australia, India and China. We've got our exclusive on Swiss Re CorSo's leadership shake-up in the region. We'll also discuss Hong Kong's new re-domiciliation regime and its impact on insurance. And we have more news on how climate change is reshaping agriculture and agri-insurance in the region. Our special guest for this episode is Andrew McMellin, President, Markel International. Speaking to us from Singapore, Andrew's got some interesting insights into the specialty reinsurers' ambitions in the region, as well as his takes on emerging risks and the challenges to the industry.
Yeah, we're looking to build that premier, that leading specialty player in our chosen fields and markets, delivering exceptional product, exceptional service to our clients and our brokers. And doing that by kind of looking at 5 real pillars supporting that vision.
We have the full team here today with Deputy Editor Andrew Mullen, Special Projects Editor Kristina Shperlik, and reporter Joana Nguyen, who's back from the Lady Gaga gig in Singapore.
Yeah, Lady Gaga was fantastic. I had a wonderful experience. You guys totally missed out.
It's great to be back in front of the mic.
I'm jealous I couldn't go to Singapore to see Lady Gaga, but we were busy here covering the floods.
That's right. It was super busy the last couple of weeks. Let's get this meeting underway. Kristina, can you give us the latest on the Australian floods?
Insurers have received 8,700 claims from New South Wales floods, and around 80% of these claims are related to personal property. This is a bit different from what we were expecting, because earlier loss adjusters told us that claims would be related to property, business interruption, and agriculture as well. The ICA has also upgraded its classification for the event to an insurance catastrophe last week, and the damage so far has been extensive. We know that 10,000 properties have been damaged, around 1,000 are uninhabitable, and 3,500 people are still isolated. One of the most interesting things here is the protection gap in Australia. Andrew, I know you spoke to a broker who is based in Taree, one of the most affected towns.
Yeah, I was really grateful for Jeremy Thornton to replying to me. He's obviously in the thick of it on the ground, right on the Manning River, which is one of the main sources for this flooding. And he told me that 9 out of 10 farmers, as this is producers in his region, won't be covered by insurance for this event. They just don't have cover. This has been a long-standing issue, and it just means there's a large protection gap. And he told me these producers are going to be facing significant losses from this event.
We'll come back to the protection gap and the impact these NatCat events have on farmers in a bit. But I want to bring in Joana, because floods were not just in Australia. We also saw floods both in India and China as the monsoon season set into India. Joana, can you tell us a little bit more about the events in these two countries?
So India's financial capital, Mumbai, experienced severe rainfall on May 25th and 26th, flooding roads and a newly opened underground train station. While the southern regions were particularly hard hit, other areas were comparatively less affected. Loss adjusters from McLaren's and Crawford in India told me that the rain was not unusual, as historically Mumbai's low-lying zones have faced similar conditions when daily rainfall exceeds 200 millimeters. And the one from Crawford noticed some property and cargo claims, but the overall impact on insurers remains modest.
And what about China? There was some flooding in southern China last week.
Right. So last weekend, China's Yunnan province was also hit by flash floods and mudslides due to heavy rains. No casualties have been reported, but thousands of people were evacuated. The rain, which lasts for over 12 hours, also brought some property destructions. At least 27 houses have been damaged, 16 bridges impacted or brought down, and 97 locations with road disruptions. Damage assessments and follow-up relief efforts are still underway.
It does seem like the insured losses from these events are not going to be as massive, and economic loss numbers are still being assessed. But what is clear is that the impact is widespread. Big countries like India and China, we've seen last year, have had significant losses from these events. This ties into the earlier point that Andrew was raising about protection gap in a very developed market like Australia. One of the sectors that we've seen significant losses but very little insurance coverage has been agriculture. while we talk about property damage and business interruption, quite often in our stories and our podcasts, agriculture insurance is still a very big part of Asian product mix, and climate change is really impacting farmers in the region. Kristina, you recently wrote a story on the impact of climate change on agriculture in the region and how it is reshaping agri-insurance. Can you tell us how climate change is impacting farmers in the region and how the industry is responding?
In Asia Pacific, there are some crops, for example, spice or plantation crops, that are extremely sensitive to the climate change and to the extreme weather. So they could be affected by too much rain or not enough rain or rain at the wrong time. And this means that farmers do not have a source of sustainable income that they used to have many years ago. That's why in Asia Pacific, we are seeing a shift from traditional crop policies towards alternative and mixed covers. Now, insurers use satellite and remote sensing to monitor crops, assess damage, structure parametric programs, and verify claims. Why they do that? It's because for some crops like vanilla, pepper, coffee, for example, direct yield assessment is not possible, and that's where weather and satellite-based indices could help. Indices that insurers use are typically single indices that measure, for example, rainfall or soil moisture, and composite that account for multiple weather variables or simulate revenue loss. For crops like vanilla, pepper, and coffee, where direct yield assessment is difficult, weather and satellite-based indices offer viable alternatives. Now, many covers are not linked to specific events and are focused on broader business interruption protection.
Thanks, Kristina, for that significant update. I want to discuss our exclusive last week about major team reshuffle at Swiss Re Corporate Solutions. Joana, take us through what you've got.
Yes, one of the big stories that we exclusively broke last week was the leadership reshuffled at Swiss Re CorSo Asia Pacific. China CEO Jeffrey Pan and Southeast Asia head Didier Belot will leave the company, while Singapore-based Belot will remain with Swiss Re until the end of August. Shanghai-based Pan is going to stay as a board member for Swiss Re CorSo China until the end of the year to ensure a seamless transition. APAC CFO Meng Hui-Qin will step in as the new head of Swiss Re CorSo China, effective from August 1st. She will relocate from Singapore to Shanghai and will also take on the expanded role of general manager of the Chinese entity.
Thanks, Joanna. We've been quite busy chasing all the changes that's happening at Corporate Solutions around the region. Meanwhile, staying in Hong Kong, I attended a very interesting event last week. The Hong Kong Insurance Authority had brought together ILS issuers and fund managers for an event. This is in line with the HKIA's plans to position Hong Kong as a risk management hub and a hub for ILS issuances. I had some really interesting conversations, some really good panels as well. I'll be writing about this in the coming days. There'll be a couple of stories to watch out for. Staying on the theme of Hong Kong's ambitions in the region, they've just introduced a new redomiciliation plan. AXA was the first to make use of it. Andrew, you've been looking at that story. Can you tell us a little bit more?
Yeah, so the basics here is AXA Hong Kong and Macau are redomiciling their Bermuda entity from Bermuda to Hong Kong. This is taking advantage of the new regime introduced by the Hong Kong government. As with everything, this is subject to approval, but this is taking advantage of this rule which allows existing operations to shift assets and transactions to Hong Kong without having to first close their existing operations. So this is a move that's going to streamline this process and hopefully attract more companies to Hong Kong.
That's interesting. I think still quite a few large insurers are based in Bermuda for tax purposes, and that might be a boon for Hong Kong if they decide to relocate. So let's talk about the stories that we're working on. Kristina, what have you got?
A container vessel sank near Carroll last week. It was carrying aggressive chemicals, and besides causing an oil spill, it also lost 100 containers in the Arabian Sea. Based on the conversations I've had with the market, I understand that the event will lead to a general average claim for the cargo owners, with the total loss for every container on that vessel, hull marine claim for the vessel owner, which is the Mediterranean Shipping Company, and environmental liability. And the losses are expected to be in tens of millions of dollars.
Oh, there's likelihood of a general average. That's quite an interesting development there. Moving on, John, I believe you're looking into the trade war impact on trade credit insurers. I know it's not an easy story to track with all the changes that's happening in the US. What have you found out?
So recently we had a meeting with Allianz Trade and found out that around half of exporters in their recent survey anticipated longer payment terms and increased non-payment risks. Specifically, up to 43% of firms in China and 53% in Singapore expect a rise in non-payment risks. As the trade war poses a lot of uncertainty for the global economy in general and the insurance industry in particular, I'm chasing people in the industry, hitting the phone. And this week, we'll be having a meeting with Asia Pacific CEO of trade insurer Coface, Hugh Burke, to see what he thinks about the effects of tariffs and how the industry is coping with it.
I believe you're also looking into specifically the Vietnam market. Do you have any updates for us on that?
Vietnam has the fourth largest trade surplus among all U.S. trading partners, worth around $123 billion last year, just behind, China, Mexico, and the European Union. And initially, the country was imposed with one of the highest tariffs at 46%, but it has managed to bring down the rate to 10%, which is applied until July, or we call that the 90-day pause, to most countries that have not retaliated, excluding China. And also Vietnam is part of China Plus One, a diversification approach where businesses expand their manufacturing and supply chains beyond China. And Allianz Trade told me that because of this large trade surplus and the China Plus One strategy, potentially there's a risk that Vietnam ends up with higher rate than maybe some peers in the region. But Allianz Trade's outlook is that the rate that China will face will continue to be much higher than what Vietnam will. So in theory, there should be still interest to set up business in Vietnam compared to China. And as factories move from China to Vietnam, we will have an impact on the demand of commercial property insurance, which is one of the major business lines for Vietnam's non-life carriers.
And Joana, I understand you're going to be speaking to someone on the ground from PVI Insurance.
Right. So I've been in touch with the chairman of Vietnam's largest non-life carrier, PVI Insurance, and we'll have an interview with him soon this month. He will share his insights about the fast-developing insurance market in Vietnam, the impacts of Trump's tariffs, and also the growth strategy of PVI Insurance.
That sounds interesting, Joanna. We'll look forward to that story. Kristina, you've been looking into the construction market in Asia. How's it coming together?
Construction market is growing in Asia Pacific, specifically in China, Taiwan, Japan, the Philippines, and Australia, mostly thanks to investments in infrastructure and, of course, renewable energy. But South Korea and New Zealand do not follow this trend because they're facing sluggish housing market, high construction costs, and rising bankruptcies. In terms of pricing, builders' risk, liability, and professional indemnity are flat. Cyber is around 17% down, and the markets may face downward pressure because underwriters will aim to grow further. In general, there was no new or additional capacity entering the market except the Australian professional indemnity market, where we saw several new insurers and capacity entering, mostly focused on SMEs. And of course, PFAS remains an important topic in Australia, with insurers having varying appetite for insuring these risks.
Speaking of Australia, we're coming up to the July 1 renewals in Australia and New Zealand. That will be a story that we'll be tracking. As we've seen with 1/6 renewals in Florida, despite the increased hurricane risk in North Atlantic, prices seem to be softening, is accelerating. We saw that in Florida. It seems like the LA wildfires had no impact at the mid-year renewals. So it'll be interesting to see how the Australia and New Zealand markets react. So that will be a story we'll all be chasing. That was a fantastic meeting, guys. Let's get back to work. You're about to hear a conversation with Andrew McMellin, the newly appointed president of Markel International. Dialing in from Singapore in his first visit to the region in his new role, Andrew gives his interesting insights into Markel's strategic priorities following the recent global restructuring. You're also going to hear on what excites Andrew about Asia Pacific and the specialty opportunities in the region. It's a great conversation. Listen in. Hello, Andrew. Welcome. Thank you for joining us. You're in Asia this week, speaking to us in Singapore. Is it your first trip in your new role to Asia?
Yeah, well, my new role as president of international is my first trip to Asia. But under my previous role, I was running what we call our wholesale markets, which is our London market and Asia Pacific business. I had plenty of visits out here. In fact, this is my second visit this year to Singapore, on top of visits to Dubai and India already. So I come out to the region quite a lot. Certainly, probably 7 or 8 times a year. Looking across our broad sort of footprint here in Asia and Asia Pacific for us, just to sort of put into context, it runs from our Dubai operations, our MENA, Middle East, North Africa regions out of Dubai, through our Mumbai operation in India. We are in KL in Malaysia, here in Singapore where we hub the region. Yeah. And then with operations up in Hong Kong and Shanghai, and then 18 months ago, I opened up in Australia and now have operations in Sydney, Melbourne and Brisbane throughout Australia, sorry. So we're covering sort of 9 locations across 8 different sort of territories. So a fairly wide region and area for us.
Indeed, I think Markel probably has one of the widest footprints of all the specialty players in the region, across 7 countries in the region.
Yeah, well, I think certainly perhaps when you look at the sort of London-based operations, which is where we kind of base our international operations, and international for us, again, has grown quite extensively. I mean, if we go back to 2019, we were writing about $1 billion across international. We finished out last year about $2.5 billion, and I've gone from producing a combined ratio about 99 in 2019 to a sub 80 combined last year. And so that $2.5 billion of international, to give that some context, so we obviously have strong presence in London market. Yes, obviously we'll talk a lot more about our Asia Pacific presence, but we also have presence in Europe. So through Germany, France, Spain, the Netherlands, Switzerland. We're present in the UK regions outside of London. I have a big presence there, and similarly also over in Canada. So international for us, really, when you think about territory, it goes from Vancouver all the way over in Western Canada through to Brisbane, over on the East Coast of Australia. So it's quite a broad region.
That's quite interesting. I mean, you've just been appointed the president for Markel International. So there's been a bit of a reorganization as well at Markel recently. Could you just tell us about the new structure and what it means for Markel International, and how does that sort of fit into the broader growth strategy for Markel?
Yeah, well, I mean, I guess Markel Group, just starting at the top of the house. So, we're a Fortune 500 listed company. We've been going for about 95 years, went public in the sort of mid-80s over in the US. And we kind of organized ourselves really at the group level in sort of 3 engines. We have our insurance and reinsurance engine, which I'll go into a bit more detail. We then have our investments engine, so where we're taking the surplus profits and sort of look at our investments as a separate sort of vehicle. And then we have our third kind of engine, which is our ventures, where we're utilizing the kind of liquidity premium we have in insurance to invest in non-insurance related entities to give out our sort of diversity of portfolio. And ideally for our shareholders, all engines, hit their numbers. But if, as often sometimes is the case, if year one doesn't quite hit the numbers, you've got the diversity of the other 2 engines. Within our insurance business, we just had some new leadership there. So Simon Wilson, who was president of International, has become CEO of Markel Insurance. And there we've been, sort of restructuring the business primarily on the US side. So we now on a setup in terms of we have our wholesale and specialty business in the US under Wendy Hauser. We have our program and solutions business under Alex Martin. I'm running international, and then we have our global under Don Barr. So looking after our reinsurance businesses, and that's kind of how we're setting up from an insurance and reinsurance piece, and that's the sort of major changes that you've been seeing and we've been sort of been out in the press with recently.
And Markel International obviously being the engine that drives the international growth around beyond the US. How's that structured?
So within international, we structure that in sort of two phases, two ways for our business. So we have what we call our wholesale markets, which is our London market and Asia Pacific business. which I continue to run, and that was what I did previously. And then we have our national markets business, which is our UK regional business, it's our European business, and our Canadian business. And so we run it in those three ways. And as I say, we've grown. 2019, we're right at about $1 billion in international. Last year, we finished out about $2.5 billion. So we've had some real good growth through the business and very profitable as well. So, sub 80 combined within our international portfolio, international business last year. And then, as we kind of looking, forward, whilst we've had great growth and compared to some of our strong peers in the marketplace, we're showing very good growth on the top line, great results on the bottom line. But actually, our market share in a lot of our territories is still quite small. I mean, we have probably about 2% market share in London. But when we look at across our Canadian business, our European business, our Asia Pacific business, our UK regional business, it's probably less than 1%. And so that's where we sort of see the growth, the profitable growth opportunities for the future for international. And as we look across the next 5 years out to 2030, we talk about our vision is putting Markel on the map. And what we mean by that is, we're looking to build that premier, that leading specialty player in our chosen fields and markets, deliver an exceptional product, exceptional service to our clients and our brokers. And doing that by kind of looking at 5 real pillars supporting that vision. One is cultivating a people-led business. So we want to continue to attract and retain the best talent in the industry, bring people into Markel who want to drive a business, grow a business, create a career, and create a legacy. When we talk about how we're building a business that creates a legacy for the future. We then want to have empowering leadership. So we very much believe that that vision of putting Markel on the map, our local leaders will kind of interpret that and think about their own markets, about how we kind of position ourselves. And we want to empower our leaders to do that. And we believe in that local empowerment beats sort of centralized genius pretty much all the time. And actually, we're very much into understanding how those local markets work, getting the authorities into our local underwriters, our local claims teams to really serve their clients and the brokers in those local markets. The third pillar is sort of ease of trading. So we want to make sure that our speed of decision making, is fast as into the hands of those brokers and those clients. We give them access to knowledgeable underwriters, knowledgeable claims handlers, so we can serve those clients and brokers very quickly, and they can sort of see the strengths and the depths of that knowledge and expertise that we bring. We then want to improve our operational excellence. So that's around making sure we got the technology, the tools in the hands of our local businesses, whether that be sort of technological solutions so we can unlock the time and the value that our underwriters and claims folk can bring to bear to delivering those local solutions. It also means we've invested heavily in our sort of data analytics teams around the international business, both sort of centrally, but also within the businesses. So here in Asia, we're putting sort of local sort of portfolio managers in, helping and working with the local underwriting teams to develop the business going forward. So that's important. And then the sort of the fifth element is what we call best of Markel, and that's recognizing we have a lot of product expertise across the business. We have a lot of distribution expertise across the business and technology capability across, and then we bring that to bear by then being able to join those up and take those to market so we can develop more products into our local markets, such as here in our Asia Pacific business. And those 5 strategic pillars, sort of embrace putting Markel on the map, which is really about how we increase our relevance in our markets. So it's not so much about going around planting flags on maps, and undoubtedly we'll see more opportunities in different regions and grow into those, but more about how do we grow our relevance in those local markets and how we continue to bring exceptional service to our clients and our brokers within, those local markets that we're serving.
You mentioned the market shares in the region. Do you work towards a target in terms of, you said it's all 1%, 2% market share in some of those markets?
Our vision over the next 5 years is we want to take that sort of $2.5 billion of premium that we finished out last year, and we have an ambition to grow out to sort of $5 billion over the next 5 years, grow that profitably. So we want to hit our target profit margins within that, but we're also looking to balance within international business around, if we think about, London's been very much, the sort of, the hub and the driving engine of our international business for quite a long time. But it has a lot more complex business, a lot more the kind of more volatile business. And we want to balance that out by growing our business in our local regions. So we're growing our business here in Asia Pacific, growing our business in Europe, and getting that balance, because a lot of our local business is stickier. We're closer to the client, closer to the brokers, and doesn't tend to have the same sort of volatility we perhaps see in some of that London business. So we can get that 50-50 balance between our London and non-London books of business, by 2030, hitting the sort of premium targets, but more importantly, hitting the profit targets, then would have be happy and accomplished our vision. I'm just thinking about an Asia Pacific business. We've been out in Asia Pacific now since 2008. Certainly grown considerably under Christian Stobbs' leadership, who's our MD here in APAC. We've probably grown the business here since he came on board in 2019 by about 5 times. So we've had real good growth, profitable growth. We've been making money in the region, which is important to us. And our aspirations really are, we have an ambition to be a sort of $500 million sort of premium player by 2030, as long as we can sort of see the profits in that market. So that's the kind of scale and ambition that we're looking at within Asia Pacific.
That's quite ambitious plans for Asia Pacific. I was curious to know what excites you the most about Asia Pacific. You've built out your specialty expertise in the region. Where do you see the business growing in the market?
Well, I think, economically, clearly, over the last few years, we've seen the region, has shown stronger economic growth than we sort of see, certainly in the UK and Europe and in the US. We also see that demand curve of specialty business continue to increase. And that was really behind why we've really kind of pushed the growth over the last, and the investments we made over the last 2 years and continue to make those investments over the next 5 years. It's really that economic growth that we sort of see in the region and the specialty demand growth of insurance. And we see that across many of the territories we're in, frankly, and whether it be a kind of more mature market like Australia or developing markets that we see, whether that be in the Middle East, whether that be in India, whether that be in Southeast Asia and in Greater China region as well. We're still, relatively modest in terms of where we play in those different markets. And so we sort of see a lot of potential, that we can penetrate into those markets and do it profitably with the products that we bring to bear, and therefore achieve our sort of ambitions for the wider region.
Specialty has been obviously your focus. We're seeing a lot of emerging risks in the region, and some of these traditional nat cat risk in terms of climate change or emerging cyber risk, that's very much coming into the sort of specialty wheelhouse in some ways. How do you see Markel addressing some of these specialty risks that are and sort of emerging risks in the region?
Well, we're bringing more products into the region. So if we think about something like cyber, we're looking about how, and how we can deploy that product further into the region. So we're writing that out of our Dubai operations at the moment. We're writing that out of Singapore, out of India. We're doing a lot of research into the Greater China area around that. We sort of see various, if we think about some of our products, like our fintech product, which is geared towards that fintech market where we can provide a package policy covering different lines like D&O, like cyber, like the professional indemnity, like the GL, and bring out an innovative package policy into that market and serve, those sort of growing markets more. I think on when we think about the broader sort of climate sort of field, we Our head of renewables energy is actually based in Asia Pacific. Tom Baker's based in Singapore. We have teams in London. We have teams in Europe now, but actually, the product head is based here in Asia Pacific, and we're growing the business both in the region, and that's covering, the growing sort of demand for wind energy, for solar. We're looking at battery storage, carbon capture. More broadly, we're thinking about, how do we serve the sort of growing and expected to grow nuclear markets as well. And so that's how we can bring some of those specialty products and areas into the region and sort of serve a demand that we see in the greater region as those products gain traction.
One of the other things I just saw coming into the interview is that to complete an acquisition in the US of a marine MGA, Markel, which I understand also has offices in Shanghai and Dubai.
Markel are not based in the US. I mean, their hubs are London, Dubai, and Shanghai. Most of the business they write tends to be European or Asian Pacific clients. They are a fantastic business. We're very pleased to come together with them. They've been going for about 50 years, very much in the specialty marine, P&I world, and also sort of trade destruction world. And bringing them together, utilizing their strong brand in the market together with the Markel brand, we think there's a lot of synergies with our traditional marine products that we write within the kind of hull and cargo and war space that we can then hook up with their P&I products and their trade destruction products to not only serve their existing customers and brokers, but also go out and serve more customers. So we're very excited. That deal has just been closed just very recently, back end of last week, and obviously announced yesterday. Exciting times for us. And in fact, I'm going to Shanghai tomorrow, and we'll meet with as part of that, we'll meet with the Markel Shanghai team as well. So very pleased and looking forward to seeing them.
Obviously, one of the big questions in the market is the sort of sense that the market is softening, especially on the primary markets in Asia has been softening recently. How do you see that sort of impacting your business and your plans?
Yeah, I mean, I think we're seeing the market is sort of transitioning. We're, I referenced our sort of very good results that we had last year. We're not the only ones that are producing good results, and so people are looking to grow, and that creates a little bit more competition. I think we have to though also recognize it's still a very uncertain world, both economically, geopolitically, and what we bring as insurance is bring to our clients is certainty. And I think our clients recognize that, and we as a market have to recognize that. And we just need to make sure that we don't undersell ourselves in that market with that, that sort of wider geopolitical and economic environment. Yeah, I mean, we are sort of seeing certain sectors, that the market transitioning, but we still feel that there are plenty of profitable opportunities out there. And particularly in a region like Asia Pacific, where you're sort of seeing, as I mentioned earlier, specialty continues to increase in the demand curve. That gives us comfort that we'll continue to see profitable opportunities going into the future, and we'll pick our spots and get after that to meet our plans.
Andrew, that's all the questions that I have, and thank you very much for your time, and really enjoyed having this conversation with you.
Yeah, no, well done. And it's always good to be out here. And Asia Pacific is an exciting place in terms of what's happening both economically and in the insurance world. So it's always fascinating. I always enjoy my visits out here, and we'll continue to be out here, and no doubt come across you again in the future as well. So thank you for your time as well.
Absolutely. Thank you very much. That's all from us in this episode of Between the Lines. We'll be back again in 2 weeks. In the meantime, you can connect with us on LinkedIn. Make sure you're subscribed to our daily and weekly newsletters delivered straight to your inbox. And of course, we'd love to hear your feedback on the podcast. Email us at editorial@insuranceasianews.com. I'm Mithun Varkey. Thanks for listening.